Hello, ladies and gentlemen, and welcome to the Rheinmetall AG Investor Update Call 2021. At this time, all participants have been placed on a listen-only mode. The floor will be open for questions following the presentation. Let me now turn the floor over to your host, Mr. Armin Papperger.
Thank you very much. Thank you, ladies and gentlemen, for your time. Today we want to give you an overview about how we take Rheinmetall into the next level, which kind of decisions we made to bring it to the next level. But let me first of all go to an update of the year 2020. Starting with the defense side. In 2020, we have a preliminary sales of about 3.7 billion euro. The operating margin is around 11%, which is nearly to the all-time high. High order intake of about 6.4 billion euro, which is also a very high level for the Rheinmetall Defense Group, and a record level of the backlog of around 30 billion, and together with our shadow backlog with our long-term agreements around 17 billion euro. Going to the automotive side, so in 2020 we have preliminary sales of about 2.15 billion euro, an operating results above 25 million euro positive, and a volume of nomination letter of 2.7 billion. About 65% of that is coming from our mechatronics business and is also good profitable business. Let's go to page 4. We have a clear new strategy, and we gave clear strategic objectives also to our team. Number 1 is we want to reduce our automotive exposure. It's a very volatile business, and we don't want to have a longer big volatile business, so we have to reduce. The second point, we have a minimum target of profitability. We gave a very clear statement also to our business units. They have time of 2 years to fix their business unit and to have a profitability of around 10% EBIT. Number 3, we will make a continuous portfolio management. Our business units who will not fit into our targets, we will sell. If we go to page number 5, what about the transformation process, what we are initiated? First of all is we have made a decision of the disposal process of the piston business. Goldman Sachs has a clear task to sell our piston business, and we think that in end of quarter 2 or quarter 3, we are able to sell our piston business. The second point is the regrouping of our business activities. We want to add more non-automotive business into our businesses, and the focused approach with 5 divisions. On the next page, we will show you which 5 divisions these are. We will have the right size and also the structure to support our business. So we made cost cuttings in different areas, and we eliminated redundant functions, for example, on the group and also on the automotive side. So very clear, from beginning of 1st of March, we will not longer have Rheinmetall Automotive, and will reduce also the holding of Rheinmetall Automotive, and we will have savings of up to 10 million euro. On the next page, we see the structures in 2020 with the Rheinmetall Group and the holding. Then we had a holding on defense and a holding on automotive. And in 2021, we will guide and lead a whole company from the Rheinmetall Group holding. We'll have weapon and ammunition, electronic solutions, vehicle systems, sensor and actuators, and materials and trade, directly guided from the Rheinmetall Group, and a non-core business which we have to bring then into to sell in the third quarter of this year. As I told you before, this is pistons. If you have a look to page number 7, very clear divestment process started, and we start with the pistons business, where we decided it's a non-core business. Some other businesses are under focus, and we will find a better owner for our piston business. We will make a realignment of the core businesses, and we will have the right sizing in this organization with clear cost reduction, and we will leverage our technologies to new applications, also non-automotive applications. That means we take our technologies and we want to open different other markets. This is acceleration of our transformation. If we go now into the details, we see that our business, the sensor and actuator business, is really focused on profitable growth. On page 8, you see the IHS LV production, and we now also have a look always 2020 up to 2025. The expectation of IHS is that the car production in millions is growing with a CAGR of 5.4% from 73 million units to 95 million units. Our sensor and actuator sales with the automotive but also the civilian part will grow from 2020 to 25 from 1.2 million sales to about 2 billion, 1.2 billion sales to about 2 billion sales. From the 2 billion in 2025, 1.3 billion will be ICE, and the rest is now alternative propulsion. What is the reason that we think that we can outperform markets? Because we have new products, and then we have new emission regulations, and we bring also new products into new markets, and especially to China. A very strong growth rate will be in China. So that means EU 7 regulations, expansion to Asia, and the tighter threshold with 95 gram carbon dioxide will help us a lot. If we go now into the details, you see 3 blocks where we think that we are successful on the sensor and actuator side. These are innovative solutions for clean mobility. And with these tighter regulations, for example, are this EVAP, electronic vapor pump, the fuel tank isolation valve, we see in the year 2025 sales potential up to 300 million. Alternative powertrains, electrified mobility with thermal management, but also with hydrogen products where we book now the business. We see a potential up to 500 million per year, and to diversify into new applications like thermal management, air management, and also hydrogen applications. For example, stationary fuel cells, we see a potential up to 200 million. A lot of this business is now also in nomination letters and is booked. If you have a look now to our Chinese market, we see that the LV production will grow from 2020 to 2025 with a CAGR of 4.7% from 23 million up to 29 million. And our Chinese business will grow from 160 million euro to about 400 million euro with a CAGR of 20%. It's a profitable business, and it's very strong growing because we implement a lot of new technologies now here to China. And electrification of the powertrain, tightening the truck regulation in India, in China, are 2 examples the reason because we are growing so strong. If we go now to the next division, materials and trade, I think that we're really well positioned to capture opportunities. Let's have a look to the aftermarket. On the aftermarket, we have solid profitability, and here we will grow from 2020 to 25 from 340 million to 440 million, with a clear target to have this 10% EBIT. On the bearing side, we shift to non-ICE applications, and we see a growth rate from 200 million to 300 million euro. And on the casting side, we have a clear technological leadership, especially in China, because we are the biggest casting company for automotive, for mobility in China, and we will grow also in other non-automotive areas. And we will have a sale of from 800 million in 2020 to 1.1 billion in 2025. There is a very important success that we have is that we booked a lot of engine components for BEV, and with our flexible casting technology, I think that we have a very, very strong growth rate, especially in China. Now let's go to the defense market. On the defense side, we see all the different scenarios and the different countries. We think over the next years, Germany is relatively stable, even if there is a pressure from COVID. But the beauty in our business is that we have a lot of frame agreements with Germany, in total more than 3 billion that we will see over the next years in fixed contracts. Australia is still growing, and the budget over the next years is fixed. The UK budget is fixed, and it's also growing. Countries like Hungary, which is now one also of our home countries, is strong growing, and we see a very stable business, not strong growing, but stable business in the United States of America. Now let's go to the mega trends and the reason that we need the budget. I think the German and most of the European governments see a clear pressure from Russia and China, and I think we should be and have to be a little bit more independent from the United States of America. So European Union and the European defense have to play their role and have to help in the NATO and have to invest more. I think most of the European countries understand that and will do it. If you have a look now to page 13, we see what are the possibilities of Rheinmetall, and I think we are very competitive on the vehicle portfolio. Let's go into the details. And here we have four different opportunities. One is infantry fighting vehicle, which is the biggest opportunity for us. There is an opportunity over the next 10 years from Puma that we see an opportunity of about 3 billion euro. Then Lynx, and Lynx is at the moment new in the market, and most of the customers are very happy with that product. So we see an opportunity in total on the infantry fighting vehicle side between 15 and 40 billion euro. 50 to 20 billion is Asia and Europe, and the big cherry on the pie for sure would be the US market. We will have a decision latest in the second quarter this year about a digital study of the infantry fighting vehicle in the United States of America. Second point now is main battle tank. On the main battle tank, we see the Leopard, and there will be for the next 20 years some refurbishing programs on the Leopard side for Challenger. Our expectation is that we now get also a decision in March this year about the Challenger. There is some delay in this program, as you know, but we think now the British government made a clear statement about that. And over the next 10 years, a lot of R&D contracts and prototyping contracts of the main ground combat system. where we think that over the next years it will grow up to a European program. The reason for that is that it was a German-French program, but we think now with the new status of Great Britain that they won't be part also of the main ground combat system, also of other European countries. I see an opportunity of 5 billion on the main battle tank business. Then the third pillar is our wheeled vehicles business. From 4x4 to 8x8, we see an opportunity of 5 to 6 billion. There is a new hybrid vehicle, there is our Boxer, there is a new Fox, and there is especially on the 4x4 a contract that we expect over the next 2 quarters in Hungary about a 4x4 vehicle for the Hungarian armed forces. And last but not least, on the truck side, we see the HX family, which is very successful at the moment, but we have also a new truck family, and we will launch now next year the future trucks. And on the future truck side, there are some gimmicks like platooning and other things inside. And we gave now the first introductions to our customers. They are very happy about that. And we see 7 to 8 billion euro opportunities over the next 10 years in order intake. If you see the whole picture, we have over the next 10 years an order potential of around 30 to 60 billion euro only on the vehicle side. If you have a look now to the details, you can see that we booked the Hungarian business. Only on the vehicle side, we booked more than 3 billion last year. We also booked the radar business of nearly 300 million and some other businesses, so that the total order intake from Hungary, the expectation over the next 10 years together with this contract is about 10 billion euro. Then we are in negotiation with the Czechs. There are elections in September, so we will see that if there is now a decision before the election or after the election. We are very near with the Australians, where I think that in end of this year they will make a decision about our competitor or us, but I think we have a very good chance. It's about 4 to 5 billion euro. And other Eastern European countries like Slovakia and Slovenia also want to join the club on the link side. And there is for sure the United States of America, where I told you that the first study, the digital study, which has between 80 and 120 million US dollar, they will make a decision latest in the second quarter this year. There are also other countries which are looking now for infantry fighting vehicles like Italy or Greece, but this is not so detailed than what we have here on page number 14. If you have a look now from 2020 to 2025 from sales and targeted sales, you see that in 2020 we made 3.7 billion sales, around 3.7 billion, where we had 30% weapon and ammunition business, 23% electronic solutions, and 47% vehicle systems. You see that our target for 2025 is with the booked business that we have and the order intakes over the next years, that we will have about 5.5 billion euro sales in 2025. The weapon and ammunition business will be around 27%. Electronic business will stay on the same level, and a growth of about 4% on the vehicle system side. But in total, the mixture, I think, is very healthy from our side. The driver will be vehicle systems, but the positive thing is that if we get a vehicle systems contract, electronic solutions automatically book business, and weapon and ammunition also automatically book business, so it's relatively safe business. So if you go now to page 16, then we see that we have a much stronger focus on defense. And here you only see from 2020 to 2025 on the targeted sales that there is an ICE exposure only from 15 to 20% in. So we will grow in the group side from 5.9 billion in 2020 to about 8.5 billion in 2025. And the positive is also that we have 70% defense exposure in 2025. And if there is if we want to sell more auto business, then for sure it will be a higher proportion of defense than we see at the moment. At the moment, only calculated in is the sale of the piston business. If you see now our One Rheinmetall strategy, and it's very clear that Rheinmetall has to be a technology-guided company, there is a clear commitment, a very, very clear commitment to our technological leadership. So we divest non-core businesses. It's very clear that the defense business is our core business. Our electronic business is also core business. The rest we are looking for if they reach the targets. We will divest non-core businesses. We reorganize the way we do our businesses in a lot of cost cuttings. And the positive thing of COVID was that we really learned how to cut now the costs inside very, very fast, and we will continue on that. So we leverage our core technologies strengths, and we integrate the technologies from one division to the other one. There are not longer obstacles because we guide from the top. We have no longer Rheinmetall Automotive or Rheinmetall Defense between the Rheinmetall AG, and we capitalize our state-of-the-art technology also for other businesses. That means non-automotive business. We continue our successful defense development for sure. I think over the next 2 years we are able to create a backlog around 20 billion euro. And we diversify into high growth markets, where we can use our techniques also into other businesses. Very important for us is also because we only have one world, and we have to take care about that world. It's the ESG forms, and in ESG forms part of our corporate strategy. I think a very important thing is that the top management and also the middle management has ESG targets, and it is part of the new LTE compensation. So 20% of the compensation, of the LTE compensation for the management is now depending from the targets that we have on the ESG side. And we see on the environmental side a very clear target on carbon dioxide. So it's clear that together with German Bundeswehr, they want to be carbon dioxide neutral in 2035. So Rheinmetall want to be carbon dioxide neutral before 2035. We want to reduce the water consumption over the next years by 10%. And starting in the second half of this year, we will have a clear cockpit that we can see weekly about what's going on with fresh water, what's going on with our carbon dioxide production, etc., etc. We take care about the nature, and as one example is only the forest that Rheinmetall is owner here in Germany has 450,000 tons carbon dioxide bound in the woods. On the social side, we take care about the health and safety of our employees, and we will very clear transparency in the supply chain and also in the employer of our choice. And on the government side, we will have, and we still have, a very, very robust compliance system, and we will have a zero tolerance policy on that. A continuous improvement of transparency and ESG ratings, and zero controversial weapons. So we will not accept, we will not produce, and we will not trade controversial weapons. And we have a comprehensive export control and trade compliance organization. So if you do now everything in a nutshell, I think we will have an attractive growth profile. Rheinmetall's clear target on sales side in 2025 is that we want to have around 8.5 billion euro sales. We are really going with higher profitability. The margin must be minimum 10% in every business unit. That means that also the group have to have minimum 10%. And we focus on free cash flow, and cash on sales is our target 3 to 5%. So you see, these are high targets, but we have passion for performance. And now we are open for a Q&A. Thank you for your attention.
Thank you. Ladies and gentlemen, if you would like to raise a question, please press 9* on your telephone keypad. If you would like to withdraw your question, press 9* once again. The first questions are coming in, and the first question comes from Sven Weier. Please go ahead.
Yes, hi, it's Sven here from UBS. Good afternoon, Mr. Papperger. Thanks for doing the call. My first question would be on the pistons disposal, right? And I wonder, in terms of, you said you're aiming for disposal by Q2, Q3. I mean, do you have a certain kind of minimum price in mind, or would you also be willing to sell it for a kind of a more symbolic price? That's the first question, please.
No, we don't want to sell it for a symbolic price. I cannot tell you the minimum price at the moment. This would be too easy for the investors to say, but we want to have a fair price for that. I think we worked out with Goldman a very fair proposal, and we will start over the next 2 weeks now to make the pitch with our with investors, and we expect a fair price.
Okay, understood. The second question is also on automotive, and thanks for the pie chart here by 2025, where you show your ICE exposure. Just curious, I mean, is that ICE exposure of 15 to 20% that you have there, is that with products that are only usable for ICE, or is it basically reflecting the market that you still have in 2025, but it is basically with dual-use products like pumps that you could also, if the market takes a more aggressive turn towards electrical, that the share would be lower?
My expectation is very clear that the share in 2025 will be lower, because if after the first step, we are looking for also a second step.
Mm. But in this base case, it's still also with products that could be dual use, right? So if more electric cars are being sold, you sell more pumps to battery vehicles, or is this ICE exposure really with like dedicated?
Some of them for sure will be dual use, and especially on the website, as you know, we will grow much stronger than in other areas for sure.
Okay. And the third question I had was shifting gears to defense, the 5.5 billion target you have by 2025. I mean, how many of these orders that you have in the pipeline do you need to win, and how much is basically already sort of in the backlog and is kind of your base business anyhow?
Yes, I told you we have at the moment 13 billion fixed booked backlog. We are very conservative, so about 3.5 billion or a little bit more of that is in the shadow backlog. These are frame agreements. These are usually also fixed book. So in totally, as I told you, we are between 16.5 and 17 billion that we have booked business. We know that we year by year relatively save what we book on the ammunition business, etc., what is coming in. but you can calculate over the next years a lot of this business which is coming up in 2025 is also in our booked business. An example for that, if you have a contract like the Hungarian contract, if you book 3 billion, you usually have over the first 2 years not a lot of sales, but then you have a small ramp up, and usually then you have 5 years, so in total about 7 years where you deliver. So if you have now 5 years and have a 3 billion contract, you can count all the slices, how much you have then also in 2025 in. And every new contract which is coming in, and there are the truck contracts, for example, that we have booked in Germany, some new will come. There are the Central European business also on the vehicle side. I think we can grow up our backlog so that we think that we are relatively safe.
Understood.
Another argument,
the last question
maybe that helps. Maybe one sentence. Another argument that helps is with our systems, our platforms that we bring into now the market, the service and the maintenance business and the spare parts business is also growing. So the expectation is that at the moment when we have 250 million now, that we think that we can double our service business and it can grow up between 400 and 500 million euro. And as you know, this is relatively safe business because the customer need it, otherwise they cannot handle their equipment, and it's also a fair and profitable business.
Understood. And the last question is on the free cash flow target that you have upgraded, basically. So is that your aim to achieve this in 2025, and until then you still have the 2 to 4%, or should we already factor that in also in the years before?
As you know, we have two different businesses. The civilian business, on the civilian business, you usually are in this area 2 to 4%. But in total, yeah, we want to be in this range of 3 to 5%. So at the end of the day, in the middle, we will be 1% better than over the last years, and we will make it continuously. We are not waiting up to 25. We want to do it as fast as possible.
And does this higher target also change your view on dividend payout ratio or share buybacks? Any changes on that end?
We are not interested at the moment on share buyback, but to be very clear, and this is what our CEO is nodding very, very strong about that, to say, okay, if we have more free cash flow at the moment, as you know, we have 30% to 35% of our net profit, and we think to grow up maybe then to pay out also 40%. This was also a question of what are you doing with the money from the piston side. At the end of the day, if we have not good targets and we want only have targets which make 10% profit, you have to give it back to the owners, to the shareholders, with dividends over the years.
Thank you, Mr. Papperger.
It's a pleasure.
We have quite a few questions coming in. The next questioner is Mr. David Barker of Bank of America. Please go ahead.
Good afternoon. Thanks for taking my questions. I've got a quick couple. Clearly, once you've got the proceeds from the piston sale, you're going to be in a net cash position or a very low net debt position. How are you thinking about M&A in defence? It's something that's not really been touched on in your comments so far.
Mm-hmm. Yeah, we are looking for M&A targets, and we always do this. And there are some targets at the moment that we also see, but we are not under pressure. But very clear, if there is a target which really fits, where the price is also fair, we are able to buy because you see the balance sheet is strong. Maybe my colleague will tell you something about the balance sheet side, and
so I think it's one of our major tasks to have a sustainable, healthy balance sheet. Actually, our equity ratio is around 30%. Strategic range is between 30 to 35. But as you are aware, having a continuous cash surplus, we have enough room to look for M&A transactions. Actually, our firepower is around 1 billion up to 1.5 billion. But I think it is still not easy to find the right target, as my colleague already mentioned. They have to fit in our portfolio range, and they have to fulfill also certain requirements regarding profitability.
Understood. And I've just got a quick follow-up on some of your non-automotive businesses in the auto group. I think at the Capital Markets Day a few years ago, you identified some non-auto revenue sources like castings and forgings for telecom customers. You had that Pedelec product that you were prototyping. How are you thinking about these non-auto businesses in your targets for 2025? Are they a big component of the growth?
Yeah, we think there are on the casting side, yes, there is an opportunity, especially on the telecommunication. So there is a lot of business booked, and we will continue on that. We're looking also for different other stuff, but on the casting side, I think the main trigger will be the automotive business in China. We are the biggest caster, as I told you, in China for the automotive side, and most of the customers appreciate that. So we booked last year most of the luxury OEM parts for the BEV engines, so that we have booked business also for the next 5-6 years. This is from Volkswagen, this is from BMW, this is Mercedes, etc., etc. In that way. So the main part will be still the automotive part, and especially also now the BEV part, but also the combustion engines. There is a change, by the way, now also on the Chinese strategy. 2 years ago, most of the people thought that the Chinese will kill now the combustion engines. Now the people came back to us and say, okay, we need resources also on combustion engines because they want to stop the combustion engines now in 2060, as you know. So this is a very long time. In other areas where we are looking is we are looking in climatization technologies for different areas where we are good in pumps, and we combine other things. At the end of the day, as we know, we will grow up slowly, and we don't want to invest in technologies that we have not in our house. But especially for these technologies that I told you before, I think we can grow with a new marketing team. But it will be not so fast, and we are not expecting such a fast growth in the non-automotive business.
Understood. Thank you. And just one final question on cash, if I may. The kind of reorganization and cutting of the automotive holding, how do we think about the restructuring cash out for that process? And then in terms of CapEx and capitalized R&D cost for ramping up the kind of auto capabilities, is there any increase that you anticipate for the remaining business as we get to 2025?
So the restructuring of the automotive holding will cost us a minor amount of euros. The aspiration regarding savings is around 8 to 10 million in the next 2 years, and we actually expect not a major increase in the activated R&D. We will see some peak this year, next year in defense-related products, but not in auto or civilian-related products.
Fantastic. Very clear. Thanks for answering my questions.
Welcome.
The next question comes from Mr. Joseph Ayola of Morgan Stanley. Please go ahead.
Hello. Good afternoon, and thanks for taking my questions. I just had a couple, please. I think in the presentation, firstly, you mentioned that you're expecting every business unit to generate above 10% margin. I was just asking, do you think there are any restructuring requirements to do that, particularly in sort of the legacy parts of the auto business, mechatronics and aftermarket? And my second question was just on the defense outlook in Germany, and just the sensitivity of that stable budget you see to federal elections this year, and whether there's any risk of delays or to planned investments or orders. Thank you.
So first of all, yes, it's a very clear target. Every business unit has to make 10% EBIT. They have time, as I told you, 2 years to fix it. On mechatronics and also on the hot pot side, last year we booked a restructuring cost of about 40 million euro. We expect that we need no more money, so everything is done in 2020. On the mechatronics side, the 10% will come because of the growth rate. We think we have very, very good products. The pipeline of products is full, and we will have this growth rate, as you have seen in China. So that is the reason that mechatronics will be able to hit this 10%. On the aftermarket, long time we had this 10%. We had some extra costs because of on the Pedelec side. On the Pedelec side, we will make a decision in middle of this year. If we go now into the serial production, or if you also want to sell this business. But you see, we said we made a product portfolio management, and we are on the way about that. So therefore, in very clear 2 years time, aftermarket has to fulfill also the 10% profitability. Coming to the election, yes, in September we have election here in Germany. Nobody has a glass ball, but at the moment the situation is that we have a coalition between the Christian Union and the Greens, and we prepare ourselves for everything. So if that happens, I have a good gut feeling for that, and the reason for that is I had 3 weeks ago a very interesting meeting with leaders of the Green Party, who are also responsible for the defense side, and they gave a very clear statement. First of all, we have to invest money to have a proper Bundeswehr. The second point is we have to invest to be an integral part of the NATO. Number 3 is Europe has to invest more to be also a good partner for the United States of America. And all the statements I see are relatively positive. There is one point where they have a very clear statement about the exports, and I saw exports of non-EU and non-NATO countries. This is the only thing where we think about, and they are very clear to say at the moment it is impossible with the Green Party to export something, for example, to Saudi Arabia. But to have such a clear statement is also very good. And I think it is then also politically correct if we do not make marketing before with these countries, and at the end of the day, the German politicians make a decision and say, no, we can't do it. So it was, for me, a very positive meeting, and if that constellation comes, I personally think that we will have not very drastic cuts in the budget of the Bundeswehr. So if you look what happened over the last years, you know that we came from 33, 34 billion, growing up now to 46 billion euro for defense in Germany. And if we can stabilize that, then there is a lot of money also for investment. Is it enough to rebuild the Bundeswehr totally? No, it is not. There are 10 billion euro missing. This is exactly what we know from the planning side for the huge programs. If you go to our air defense programs, etc., but only the TLVS program, there is an expectation of more than 10 billion euro costs. It is at the moment not in the plan. This is not a strong impact for Rheinmetall, and I think we are on a good way with our programs over the next years also to catch this contract that we need from the German government.
Great, that's very clear. Thank you.
Thank you.
Next we have Mr. Christoph Laskawi of Deutsche Bank. Please go ahead.
Hi, thank you for taking my questions. Only a couple of ones left, and the first one will be more or less a housekeeping question because I sort of missed the answer that you gave on a previous one. There will be, are there any costs related or immediately related to changing the group structure, and what will be the holding cost you have incurred before? So that, well, essentially the question is, what will be the net impact of changing the structure in 2021 and then going forward?
Yeah. I just said it, Mr. Laskawi. We expect only a small amount of money to be invested for closing down the automotive holding and combining several central staff under one roof. And this roof will only the Rheinmetall AG, but basically we expect the benefit of 8 to 10 million in the long run.
Thank you. And then another one on portfolio measures potentially. To me, it sounds like even though you give the business units 2 years to achieve the 10%, it sounds like you are more than willing to dispose even further assets. In a scenario where a party would approach you with an interesting offer, would you be willing to dispose even before the 2-year time frame and the 10% margin target would be met, or say in the next 1 to 2 years? Or is that essentially ruled out for now?
If the price is fair, we can speak about everything.
Understood. Thank you. And just one then on the growth outlook until 2025. Is there anything you could say about potential phasing of the growth? Do you expect it to be rather linear and step ups year by year, or is there a certain year where we should expect a major bump?
Yeah, we will have a growth year by year, but for sure, because you always have the customer at the end of the day takes the trigger to say, okay, how much vehicles he wants in which year. So it depends. So there will be years where we will grow 5. There will be years where you will grow 10%, but you can calculate up what is the mean value of that. And our expectation is, and that is the reason that we gave you the outlook for 2025. That this is a really fair target that we can reach. Yes, but we will have every year growth. But it will not be linear to say, okay, every year 5, every year 6, every year 8%. There is like always an influence. And the other point is, and for me, absolutely, this is not important. If I deliver in January or if I deliver in December, for me, it doesn't matter. So if the customer wants to have the vehicles in January, it's fine. But it's not longer in the figures from the old year. It's then in the figures of the new year. So I think for me the total strategy is important, and the street is going into the right direction. It's going north.
Understood. Thanks a lot.
Thank you.
The next question comes from Sash Tusa of Agency Partners. Please go ahead.
Oh, thank you very much indeed. Good afternoon, Mr. Papperger. I've just got 2, I hope, fairly simple questions. One is the cost saving that you anticipate in the medium to long term from eliminating the automotive sort of sub-head office, is there any equivalent cost saving from eliminating the old Rheinmetall defense business, or do the majority of those costs remain but at group level because they are concerned with marketing and so forth? And then the second question that I've got, looking at divisions or subdivisions as they currently are that have not historically achieved your 10% margin target, I'm struck by the fact that Electronic Solutions has tended to be significantly less profitable than any of the other defense businesses. I mean, it hasn't made a double-digit margin, I think, since 2011, and that was and that there may have been a sort of a one-off involved in that. Was that just because Electronic Solutions had the problems in Norway and the problems with contracts? And why is it that division should become more profitable now than it's been in a decade?
Mm-hmm. So first of all, the cost savings on the defense is not the cost savings then on automotive, because in automotive we had a clear second headquarter, automotive headquarter. This is what we implemented or we reduced the cost on the defense side nearly 15 years ago. So we found these synergies before. So we have not the same cost savings on the defense side. The second point is on electronic solutions. Yeah, have a look on the 2020 figures, then you will see if we reach a double digit or not, and we will continue. So it's very clear. We have new products now, and we go into the system of systems. You know, the digitization is bringing a lot for us. We booked very good contracts in electronic solutions. We had problems really in Norway, but we also had a lack of contracts, but we are fully booked now. We have good programs on the air defense side, good programs from different customers around the world to create our digital strategy. And electronic solutions is now also with the vehicle systems. So if vehicle systems wins a big contract, you always can count that, let me say, 15 till 20% of they will give to the electronic solution side, because they do the digital turret and all the other things is coming from their side, and it's a profitable business. So I am not afraid that electronic solutions will not fulfill. The second point on the division side, as you know, weapon and ammunition is much more than 10%, and the vehicle systems side is going now also to the 10%, and they can reach this 10%. But these guys are the trigger now also for the rest of the business. So we see not a big problem there. And as you have seen over the last years, also our electronics business usually is able to make this 10%. It is nearly impossible for the hard part side.
Okay, thank you.
It's a pleasure.
We have one more question in the queue, and the question comes from Mr. Sebastian Grove of Commerzbank. Your line is open.
Yes, good afternoon. Hi, Mr. Papperger. Hi, Mr. Merch. 4 questions in total, that is. The first two on auto, and that is on the letters of intent. Can you just remind us of what the historical hit rate was for those contracts? The reason I'm asking is obviously pretty big numbers for an 8% top-line CAGR. And the question is simply what confidence level you have for getting there. That would be the first one.
Yeah, I think we are really confident about that because, first of all, we booked a lot of business also from our electronic side for the sensor and actuators in China. This is totally new business, and this is a business that we book especially also for the Volkswagen Group and others who are still growing in China. And a lot of this business is also from the BEV side, but also from the combustion engine side. So it's a mixture. So I think there is a risk reduction from our side. The bookings that we had during a Corona year, was extraordinarily high. We didn't expect it that the booking is as high. And as I told you, coming nearly up to the 3 billion and 65% of them on the electronic side give us a big potential. But it's not only the Chinese part; it's because we have new technologies. And if you have a look where we gave you an overview to our page, it was 9. then you see that only the very new products, where we are at the moment nearly the only one in the world who are delivering this on the EVAPs and the FTI feeds, the fuel tank isolation valve. We are still on the way to book much more OEMs in, so that really this business will be an extraordinary good business for us. And 80% of the business is really high tech, where we have not a lot of competitors. So that really helps us to say forecast is for us a conservative forecast also for 2025, that we are able to grow that way, this 10% CAGR.
Okay, sounds great. Second question then is with related costs. I think you clearly mentioned the 10% hurdle rate and then the margin ambition for the related activities. I would assume then there's a full eventually needed step up in R&D baked in. There's eventually also baked in that you might develop more sales channels. That's all in there, and then nonetheless you get to the 10% plus whatever.
That's all. That's all in. That's all calculated in for that 100% right.
Yeah. All right. Yeah. Then let's switch to defense and the sales targets. You answered to the question of Sven for the book business and the infrared business to get to the 5.5 billion. So that also sounded like super high confidence level. The question that I then have is, what's really the bull case scenario? So if where could we think of if anything was just going right? So when I'm looking at the Lynx pipeline, for instance, and let's leave aside eventually really the US situation, but the 5.5 seems very much waterproof. But what is sort of the more? Yeah, I leave it there. So you.
Yeah. To be fair enough, it's I think to make a forecast at the moment up to 2025 is really a good service that we give to you as investors. And the point for me is there is for sure no U.S. business inside. So if the U.S. business would become, the bunch of the business would be after 2025, and we have also a clear strategy on the U.S. side. So we want to be the license. We want to be the license holder. We don't want to do all the business in the U.S., but the growth rate would be then perfect for all of us, for our partners in the United States, and for us. And to say what are the possibilities after 2025, I think it's too early to do this. So we want to be fair and conservative, and I don't like to build some castles and nothing is coming out.
If I may add one remark, Mr. Grover, I think you have to have in mind that there is always a time lag of roughly 2 years, already mentioned by Mr. Papperger, between signature of big tickets and ramp up into a serious production. So therefore, looking ahead of us to meet 2025 target sales, the big tickets have to be booked and signed until end of 2023, plus the normal recurrent business. And this is actually in our assumptions. And what will come after, I think, is then heavily dependent on the order intake of 2024 and 2025.
That makes sense. Last question that I would then have is just around the margin. You had obviously this midterm target of 9 to 10% that you vaporized now in 2020 with the close to 11 or around 11% that you achieved. When I look at the 8% sales CAGR that you have baked in the number of 5.5 billion by 25, the mix is, at least to me, widely unchanged. So what is really the margin ambition? And I promise we won't define it as a new target, but you cannot stop at 11 if I get that right.
We don't want to stop in 11, but this is exactly what we can tell you at the moment. And if you see the track that we had over the last 5 years, I think the expectation or what we gave you, we delivered what we promised, and I think this is for us very important. But if we can make more than 11, I'm happy about that. But first of all, We told you where we are, we fulfilled, we delivered, and now it's our job to make it step by step better. But it makes not a lot of sense now to have a look into the glass ball if we have not everything under control.
Perfect sense. Thanks again.
Thank you.
Mr. Sven Weier of UBS has one more question. Please go ahead.
That's exactly right. It's one follow-up, if I may. And the question is just, I mean, you seem to be extremely dedicated on the 2-year timeline in terms of making the decision to make further disposals. I was just wondering, let's assume there could be further dips in the auto sector, maybe not as a big one as last year, but we have to be prepared somehow. So what if that happens? Do they get another year attention, or will it be similar to pistons where you also didn't wait for a real improvement?
We are not waiting in the piston for a real improvement. We did it, and we started the process during the COVID time, as you know. This was the worst time you can have. So on the piston side, we did it. So, but this was a starting point. So to be very clear, on the automotive side, a lot of people ask us, what is the reason that you are not selling the full automotive business? To be very clear, because the price is at the moment not really attractive, what you could get. So that is the reason that we say, okay, what is the business at the moment which does not 100% fit to our business? A decision was, number one, very clear, the piston side. We told you that we go into the portfolio management, into other areas they have to fulfill. Nobody knows what happens. It could be a boom in 2 years in the auto industry because electromobility is booming, because the economics is booming or whatever, and it could be another pandemic situation. Nobody knows about that. But from us, it's very clear. We want to go this way. We want to make a clear portfolio management. We want to grow in that areas where we are really profitable. We have a clear target on the M&A side, not buying automotive businesses, but to buy maybe electronic business, which is cyber, which is artificial intelligence, which is defense business. This is our clear target on that. And you have to give us some time to analyze these things, because what we want to do is we want to create the biggest cash and cash flow for our shareholders, so to be able to pay the best dividend that we could get. This is good for you, and this is good for us because we are also shareholder of this company.
You said hard parts cannot make 10%, so piston goes, and that means that the rest of hard parts then will also have to go.
If they do not reach, first of all, we have to bring them for sure in much better shape, because at the moment in COVID, you have a situation that it's not good. The casting business is able to make 10%. They have shown this, yeah, very clear. And the bearing business is also able to make 10%. We did that 6-7 years ago. There was always a competition between bearings and between weapon and ammunition, who is better, and they had more than 10% profitability. So therefore, everything is possible if you manage it right, if you bring the right contracts in. But again, if not, then we will go our way, like discussed. I hope it is really, really clear. There is a clear target to the people, and we will fix it.
Yeah, it's clear to me, and thanks again for the call.
Thank you. Thank you.
We have one more question. It comes from Ms. Chloe Lamarie of Exane. Please go ahead.
Yes, thank you very much for taking my question. Actually, I'd like to hone in a bit more on the new materials and trade activity and what could be its path towards margin of 10% or more. I mean, obviously, you concentrate your lower margin activities following pistons. So how do you think could be a credible cost-saving target for this activity? What could be the operating leverage that you experience and the renewal of products and contracts? And would it absolutely have to include further disposals for you to reach that 10% target?
Mm-hmm. Yes, on the material side, I think it's the most important thing is to have enough orders. So on the costing side, for example, if the factory is full, and especially if you are in a low-cost area, and we are there around in China, around Shanghai, where we have our factories, so we are able to reach this 10%. So this is possible. It is possible. So during COVID, for sure, it was not possible because there was also an impact in China. But most of our activities here are in China from the materials side. So if this market, and we think this market is going into the right direction, they are able to go forward. Is there any restructuring costs at the moment? No, I told you it is not. We must not restructure in China. This is not the point. What we want to do. The second point is from the bearing side is we are going more and more in the non-auto business. On the plain bearings, the auto business is an awful business. The profitability never ever is good. But we want to shape now to this business unit into the right to go north with profitability, and to be very clear. Then we make a decision over the next 2 years what we are doing with that business unit.
Okay, great. And maybe just one slight follow-on. Sorry if I missed when you said it, but within your 2025 sales target, what would be the non-auto roughly share business that you may reach?
So if you see this is on page 16. You have this page?
Yes. So you see, going over the 10 to 15% of non-IC and new application, the new application side of this.
Yeah. So the point from my side is you can expect maybe 50% of that is then non-auto business. 50% of the 10 to 15%.
Thank you very much.
There are no further questions, therefore I will repeat. Ladies and gentlemen, if you haven't managed to raise a question till now, you still have the possibility to do so. Please press 9* on your telephone keypad. Mr. Papperger, there seems to be no further questions in the queue.
Thank you very much. Thank you for your attention. Thank you for your questions, and I hope we gave you a good overview about the strategy and the structure that we want to have into the Rheinmetall Group up to 2025. Thanks for your time, and have a good afternoon and a good evening. Thank you very much.